All right, welcome to the week of January 11th. This is John Creekmur and Drew Creekmur here. We are doing something new, John. It's going to be our weekly Roundup show where we kind of throw the camera on and we just talk kind of like what we do in the office here when we're talking about clients and investing. And we really just going to hit on topics of the past few weeks that are relevant from an investing standpoint and financial planning standpoint. So it's 2021, it's a new year, and we're going to try to bring some new stuff to all of our clients and other folks that we engage with. So pretty excited about it.
Yeah, it's kind of like it's like one of my favorite times every week is we have investment committee meeting, and different companies that we own. So we have Euclid Investment Advisory, we've got Creekmur Wealth Advisors, and we have different portfolios we manage and work with clients on. And we sit in those investment committee meetings for about an hour each time, a couple times a week, and it's one of the most enjoyable times. We get to talk about the hot topics, we get to debate what's going on, and so it's kind of interesting just to kind of be able to kind of play that out. And I think it's how we learn. It's how we grow. It's how we have new
Yeah,
ideas and just bringing different people into the conversation. So it's
yeah.
kind of a cool time.
Yeah, absolutely. I definitely enjoy it as well. I know for me, just as a young advisor and investor, it's been fun and to learn in that type of setting. And so it's definitely been interesting. So we're going to bring a similar setting to these conversations. And for this week, let's kind of hop into it. A topic that came across this morning right before we started recording was that the government was not going to ban a number of very large and impactful Chinese companies from being publicly traded. That includes Alibaba, Baidu, and Tencent are the three big names that really carry a lot of weight in emerging market stocks. And so this has been an interesting time for international companies, international investing. And I think internally for us, we have been viewing 2021 as a potential year where emerging market companies could be an area of growth for our clients.
It's interesting, Drew. So, like from just your perspective, why were they talking about delisting those companies to begin with? Those are huge mammoth plays, right?
Right. And I mean, Alibaba is essentially the Amazon of China. And what the Department of Defense was looking at was saying, hey, are these companies engaging and supporting China's military and counterintelligence services?
Right.
And they were viewing it as, I think, a way to protect the United States, is how they were saying. They were viewing that decision. Obviously, the Treasury Department, from what I was reading, they were not big fans of this potentially happening. So I think it's interesting that we see those large companies not ending up being delisted from the U.S. stock market.
Right. So companies delisted, and as far as on trying to find ways to keep the flow of the economy moving and trying to shut down certain companies for political reasons, whether it be in the U.S., outside the U.S., it has huge ramifications across the board. And so now when we see these companies, particularly from China, that are mammoth companies that have a huge amount of revenue that impact a lot of us as far as in the way we interact daily. You on to the capital markets on the different exchanges here in the U.S., it's a big deal.
Yeah.
It's a really big deal from an investment standpoint.
Yeah. And, I think one of the questions that I've heard from clients recently, people are saying, hey, why would we invest in emerging markets? What's so attractive about emerging markets right now? We have the pandemic that started over in Asia, US dollars following. Why are you guys looking at emerging markets? John, I think you kind of, I like your description of it. You've been in the game a while. So what's your 2 cents on that?
Yeah, thanks for revealing my age,
Yeah,
Drew. For
sorry.
30 years. I'm not that old, really, except for the wrinkles on my forehead. But it's interesting. For 30 years, always talking about how the international markets is a great place to be, a great place to invest, and so but we've had some time periods where the U.S., especially U.S. large cap, has greatly outperformed,
Right.
has led the way higher. And but right now, as far as the international marketplace, particularly emerging markets, and now developed markets like Germany or it's like England. So an emerging market really is an economy that is either young and immature, or there's not a lot of infrastructure developed, or they're growing rapidly. And so China was really what's called a frontier market. That's really a small economy, and they've kind of matured a little bit, and they're still emerging, which means that their economy is still growing at a fast pace. Slow down a little bit, but the reason why emerging markets are really interesting right now is that over the last 4 months, the value of the dollar has really
Right.
increased, right? And so it's kind of, what does that mean? And so when the value of the dollar decreases, that actually makes investment in foreign companies more valuable. Makes it easier for them to generate profits. And folks, we all know the reason why stocks go up and they go down, it's all a measure do investors think these companies are going to make more money in the future? And so, if so, well, then the value of those holdings go up. And if they don't think so, the value goes down. And so, with the dollar decreasing in value, that's going to make those companies' goods and services more profitable to sell. And so, they're going to theoretically make more money. The other things we're looking at is the economies, especially out in the Far East with COVID, they're actually further along than the developed countries are, either in Europe or in even here in the Western Hemisphere, in the U.S. and Mexico and Canada. And so, so their economies are actually picking back up. And it's kind of funny, Drew. Whenever we look at information out of China, some folks say, "Well, I don't trust them. What do you believe out of China, the government, right?" And so, but when you look at things like energy usage out of manufacturing facilities,
Right.
it's been trending higher. That's probably a better sign to say what do we recognize in patterns. And so, it's actually a better position to see growth and Drew, even in our weekly analysis of what's moving up
Yeah.
and down, at what pace up and down. I mean, the emerging markets seem to be gaining some traction and moving up rankings.
Well, and they are easily outpacing the developed international companies as well. I mean, we really try to stay away from Europe. There's not a lot of growth there. They're very developed economies, very developed markets, and ultimately for our clients and as investors ourselves, we're looking for growth. We're not looking for dividends from like a Shell or an HSBC. We're really trying to find those companies that have potential to really increase their valuations from an investing standpoint. So emerging markets, we're keeping a big eye on that. I think that we've introduced some exposure in portfolios. We'll continue to track just in the months ahead how we move forward on that front. And, I think piggybacking off the pandemic conversation, here in the US, we've seen a wide variety of responses, but what has been true is people have not been able to work. Economies from a state and federal standpoint are really seeing much lower production. And a byproduct of that is tax dollars are down substantially here in the US at both the federal and state level. And in recent weeks, interesting conversation from an investing standpoint and from a personal tax standpoint has been how will states in particular make up those lost revenue dollars. And so we have a couple areas that we've been talking about internally, been tracking for a number of years, really, that I think is pretty interesting. One is sports gambling, and then the other is marijuana. Both are vice topics, so they can be a bit divisive for people, but they have the potential to provide a lot of revenue from what we're seeing internally with our metrics that we're tracking.
Yeah, I'll tell you, it's interesting right now. We're seeing a huge change in the economy, and the last year's been transformational, and for so many people, and on the personal level, as far as the way people relate with their kids and stay at home and all that kind of stuff, and even from a business standpoint, it has been just it's been interesting to watch how different people have adapted, and their work life has adapted, the companies have adapted, and when we get to the other side of this, which we believe is coming sooner than later, with vaccine rollout and all that kind of stuff, and as a country, we're going to move past this. But on the other side, things are going to look different. And then at
Yeah.
the same time, here in America, we're going through a change as far as an administration at the presidential level. We had the Senate actually go from Republican control to being 50-50 with Vice President Harris will be casting the deciding vote, and the House being narrowed as far as in representation. So we even have a different dynamic here from a
Yeah.
governmental standpoint. And so then we have to say, well, what things are we going to see change? So a couple things you had mentioned, like let's say marijuana as a great example. So I don't know the exact number as far as how many states marijuana is legalized on the recreational or on the health side, medicinal side. I know it's a growing number. A couple more states just passed. I think New York and Virginia, right, both just recently passed legalization. I think we're going to see a push on the federal level, whether a person may like that or not like that, as far as a push to see legalization at the federal level. And so, if we see that, the question is, what does that mean from an economic standpoint? Well,
Yeah.
we see it, we're going to see taxes as far as the marijuana usage, whether it's recreational or medicinal. But also, it's going to really create or grow, if you will, a whole new industry segment.
Yeah.
And so you kind of think about that. What does that mean? Well, So fertilizer companies, they may get a huge uptick as far as in revenue. If we look at companies that produce hydration systems, sprinkler companies
Yeah.
for growing, you might see that industry actually see a big bump up in revenue. And so it's interesting to see this. It changes whenever you see a change as far as from a legal standpoint.
Definitely interesting. And I think then the question becomes from an investing standpoint, how do I invest in that sector? Let's use marijuana. I think that's a unique topic. There's going to be a couple really big winners from that standpoint, and there's going to be a lot of losers. So, what is the best way to diversify that risk? Would it be an ETF? Would it be buying a bunch of stocks individually that you like? How would you address that from an investing standpoint?
Man, huge question. And so anytime you have we'll say a new or a immature industry, it really is kind of like the wild, wild west. I mean, when you
Right.
think about it, there's a lot of entrants in that space and a lot of companies that were really kind of, we'll say micro growers, or they were really kind of smaller firms. Well, now all of a sudden we're going to have heightened regulation. We're going to have rules. We're going to have taxation. We're going to have audits from different governmental entities as we see the industry mature a little bit. And so a lot of companies, maybe there are businesses that were fine when they were small. They're probably not going to have the chops or the experience to be
Right.
of the managerial ability to actually go to that next phase, and they're going to get gobbled up or they're going to go away. So buying individual names, I mean, you might hit it and like make
You
it
might hit a
big,
pot of gold, right?
but there's a better chance than not that you're probably going to
Right.
lose it. And so you want to make sure you're diversified in that space. Anytime you have a new industry, space exploration is a great one.
Yeah.
It's really a new industry, so you want to make sure you're diversified. So sometimes a package product probably makes the most sense. Man, I personally I wouldn't go into individual names unless it was money I wanted to lose, and I don't have a
Yeah.
lot of money I wanted to lose, and so hopefully you don't either. But I would say
Yeah.
sometimes the diversified package part it makes the most sense.
Yeah. I think from an investment management standpoint, what we're looking at internally with these topics is, how much growth is there? How many states are going to legalize? And we're trying to track the momentum there. Ultimately, when we're looking at our satellite, we're looking for momentum and sectors of the economy that we think there's huge growth. That's been tech over the last 10 years. These are a couple of sectors that we're just going to keep an eye on and kind of see where things go from there. And markets, whenever they're approaching all-time highs, kind of like they are now, generally speaking, from an investing standpoint, I think we've been hearing a lot from folks saying, hey, how do I invest my money right now? I'm concerned about politics. I'm concerned about the transition to a new administration, about the economy. What do I do? And this is more of a behavioral finance conversation, but it's one that we have all the time with our clients, right? Um, and I think from our standpoint, the phrase "it's the time in the market, not timing the market" that is so important, but it's so hard to do. And so, from a behavioral standpoint, what are some of the mistakes that we want to try to avoid from your standpoint, John?
Yeah, so and that's a huge question. And right now, I mean, anytime you're investing and you have a tinge of emotion involved,
Yeah,
man, oh man, you want to be really careful. And whether that emotion is like glee and you're excited, or the other side of it and you're
yeah,
like fearful. We see too many people from a behavioral standpoint over the last 30 years where man they blow things up and it's like and so what do you do and like right now we see people that are really a large swath of our population is in one of two camps. They're fearful for some reason, or else they're like filled with unrealistic hope, and
yeah,
it's like either one of them can get you in trouble. So a couple things we always encourage folks that we do internally is don't invest based upon your politics. And so that's a game. You got to be aware of what's going on politically. You need to make sure you understand how different changes in administration, changes in political parties, changes in who's in leadership in different areas, both at the federal and state level and governmental outside of the U.S. internationally, how that affects things. But boy, if you start getting emotion filled on those things and you're making investment decisions through the lens of your personal political beliefs, you're probably going to make bad mistakes. We've seen it happen time and again. So I'd say
yeah,
take that off the table, take a step back, and start with number one. With every single investment account you have, what is the goal for that money? And so put a time on it when you're going to use it, when you're going to need it, and then also put some type of dollar amount or a percentage on it and say,
Yeah.
this is really for retirement and it's not for 10 years or 3 years, or I need that income off of this money. Or this is for grandkids college funding or kids college, or this is buy a car in 2 years. Based upon that, that's your goal objective for the money. And then based upon that, you can say, okay, now how do I invest on it? And so
Yeah.
calm down, don't get emotional, don't look at your politics, and instead begin with the end in mind and say, what's our goal for this money?
Yeah. And I think that's easier said than done. It's where having someone that you can bounce things off of, having that trusted advisor that you can go to and say, "Hey, this is what I'm thinking. What are you guys seeing?" And we ultimately, John said, try to remove the emotion from it. That's really what we're here for. We're here as the behavioral shield or the emotional shield to try to help you as best we can. Sometimes, we can't control what you do. It's your money at the end of the day, but we can just tell you here are the facts. And so that's ultimately what we're always going to try to do. And we before we hopped on this call, we said, hey, what are some of the questions that we're hearing a lot in client meetings? Kind of took an internal poll from people, and the big one that we've heard is, hey, we have this money in the bank, whatever it is, and we need to make a Roth contribution. We have 20 grand. We want to put in our brokerage account. How do we invest that? What are our methods? Should we just put a small amount in now? Do we put a lump sum in? John, walk through for people how we try to address that question.
Yeah, I'd say I'd map it out first, and let's go back to the goal question and what's the goal of the money. But
Yeah.
whenever you decide it's time for it to get into the marketplace, and let's just say in the stock market and ETFs, mutual funds, whatever the tool may be, um, a couple of things we would always encourage folks: let's not go 100% in at the one time. Let's start to dollar cost average in, put a little bit in on a regular, systematized basis, scheduled basis. And so maybe it's on the every other week, on the Tuesday every other week, or maybe it is the first of each month or the 15th of each month. But whatever it is, set a certain dollar amount in an appropriate period of time. We'd say at least 3 to 6 months, and just systematically have the money go into the market. So that smooths things out. The other thing that does is we have no idea 3 months from now, 6 months from now, is the stock market going to be higher? Is it going to be lower? And so
Right.
whenever you say, hey, let's just kind of go in. We have hope that long term, 10 years, 15 years from now, the market's going to be higher. Let's go in systematically over time. That's going to smooth out the ups and downs. The other thing that it does is that keeps some of your money sitting in savings. And so
Mm.
let's say all of a sudden you go 2 months, you're putting in, you're sitting there going 10% a month for 10 months to get a full amount in on 10 months. You go for 2 months and all of a sudden the stock market drops 15%. Well, like we
Right.
saw back in February of last year, right? Where it dropped 37% over the course of 4 weeks. Well, if you're sitting there for money in cash, well, now all of a sudden you can buy in a lot cheaper and get in at a better purchase price. So dollar cost average, go in slow, make sure it's all based upon your goal time frame.
Yeah. And I think you definitely hit it. We can't control what the market's going to
Mhm.
do. We could see a sharp pullback any day, and as humans, we have this loss aversion. We don't want to lose money, but it's important. Let's just say hypothetically that happens. It's important to recognize that again, it goes back to time in the market that ultimately determines your results. If you start seeing those losses creep up, human nature may be, hey, I don't want to be in the market. I want to pull it out. That's probably the worst thing you can do because then you have no idea of saying, hey, how do I get the money back into the market? At the end of the day, I saw a study on this past week where it showed, hey, if you invested at the peak in 2008 and you just invested your money, what would happen? If you left the money in, you're fine. And John, I think you actually saw this play out with clients that you worked with who actually retired right at that time period. Which can you imagine retiring and then a couple months later the market does what it did
Yeah.
back then? You actually lived through that.
Yeah, I tell you, it's scary times for some people, and it's real. It's just, I mean, think about it. You've worked your life, your career. Doesn't matter how old you are. Maybe you're 30 years old and or 25, and you saved your hard-earned money, and you go to invest it, and all of a sudden the market tanks and it drops because something really unusual happens. We have a viral pandemic around the world, or we have, an economic collapse because of high debt mortgages that are going
Yeah.
bankrupt, or we have a terrorist attack, or whatever it is. Well, man, it can freak you out. So all of a sudden the emotion starts to well up and it kind of gets to where you want to say, I can't lose it anymore. I want to pull it out. Make sure you walk through that logically. I mean, on the practical, Drew, I mean, even for my own personal money, there's money that I handle and I invest. And I have other accounts that I say is serious money. I either hire someone else to manage that for us, for
Yeah.
me personally, or I have a group of other financial counselors that are wise, that I trust, that I seek input from them before I make investment decisions. And so I've diversified, even with my 30 years of experience, all the degrees, the different accounts we manage, the different products that ETFs that we've launched, even with all of that being well regarded, I recognize that even I can be tinged on my own personal decisions by emotion and fear and greed. And that's where we depend upon other financial advisors to help us make those wise decisions.
Yep.
And
Yep.
that's
Absolutely.
what
So,
I
in summary, we would say, hey, have a plan.
yeah,
Know what you're going to do. Have a systemized plan. Go in consistently whenever you're trying to invest near an all-time high, and then no matter what happens going forward, trust the individual that you've chosen to work with to help you be your emotional shield to protect you from making a decision that might hurt you years down the road. And so, definitely some good words of wisdom there. So that's all I have for this week's roundup. John, anything else from you?
I'll tell you what, we're great. It's been a cool start of the year. Looking forward to seeing what's in store for us for 2021, and maybe we'll get back to head out to baseball games and basketball
Yeah.
games sometime sooner, movie theaters, whatever you love to do, and hopefully we'll be able to do that here pretty soon.
Yep. Yep. Absolutely. It should be on the horizon. So thanks, guys. We appreciate each and every one of you, and we will talk to you here in the future. Have a good one.
See ya.